Hello everybody, it's April 1st, 2022. We are going to take a look at the Bitcoin chart today, see what this week has brought. So, if you remember on Monday, I was looking at two different scenarios. Previously, prior to this past weekend when price was still below 45.8, I was viewing this, because of the action we saw, as impulses downwards. I was viewing this as most likely being a setup for further down. And the break above 45.8 certainly put that into question, because this can, this is no longer the start of wave one. This right here is not wave one, and that's not wave two, because we've now come up above the beginning of that I assumed was wave one previously. However, I maintain that this orange WXY is still possible. And as long as we remain below this red line that I have right here, 52K, as long as we're below that, this can be a WXY resetting this orange fourth wave before we come down into the fifth and final wave of orange 5 down here to finally finish off this fourth wave. Okay, if you don't know what I'm talking about, please go back to the video I did on Monday. I went over the larger time frame, the daily chart there as well, looking at that. But basically, I've been expecting, a new low to finish this move off, to finish this correction off, and we haven't seen it yet. And so, while I was looking at this action coming down off of this, 45.8 high here, it really looked like it wanted to continue downwards, and we never got a lower low to complete that pattern. Okay, so that's the bearish scenario, is that we are still within that pattern, WXY. We've just reset wave 4, and we can still come down further. That, at this point in time, is still completely valid. That is 100% a possibility. But going above 45.8 has made a bullish possibility a little bit more likely as well. And so now I'm pretty much neutral. I'm 50-50 between these two scenarios. And the bullish scenario is really not a good one. This is not a healthy structure for the bulls. It is a diagonal at best. Meaning we're going to have overlap between 1 and 4. So here's 1 and 2, and we would be working on a wave 3 right now, and we need to get above 52K, somewhere into this red box here, somewhere between 52 and let's call it 59, right? Somewhere in that region would be the third wave in a diagonal. And then we would be coming down from there into a fourth wave, which is going to overlap with the first wave. Right? And that's the best case scenario that the bulls have. It is not a high probability structure. It's not something we can easily try to trade. Impulses, true impulses, are much, much easier to trade. They provide a much higher risk reward profile that allows you to have, proper risk management. And diagonals are just not nearly as reliable for that. So the best case scenario, honestly, would be to wait for this 3 to top out and then try along here at the bottom of 4. And maybe we can scalp along up from 4 to 5, which could go, 42 up to 60 or something. Or, we'll have to see when 3 actually tops out. That'll change based on that. But in any case, it really is not a strong foundation for the bulls to be building upon, and that's why I'm still 50-50 with the bears right now. So in any case, we are, if we do push above 52K, I will more likely be bullish at that point and be looking to buy a pullback, because that would make the bearish scenario less likely. It's still not completely out of the off the table, but it would be less likely if we go above 52K. And that's the other problem with diagonals, is that even if they start looking like they're playing out, like, it could easily still crack down and break down to that new low, even though it'd be less likely to do so. Okay. So let's kind of go in here, and I try as much as possible not to remove things off of my chart so that I can keep track of kind of my success rate here. And if you're looking at my previous analysis, like you can go back and watch my videos, but previous analysis has been pretty spot on. Red boxes are resistance. Here's our red box resistance here. Here's a green support. Here's a red resistance. Here's a green support. You know what I mean? I try to keep that stuff on there just to keep it, keep track of what I've analyzed and drawn on the chart here. I try not to go back and edit that too much. Well, I don't go back and edit it at all, but sometimes I go back and kind of clean things off just that are making it messy. Like right now, I'm probably going to go ahead and delete this fib because that's just making it messy, this blue fib here. But I just want you to note that this is how I got this red box right here. The third wave in a diagonal should realistically go at least to the 1236, which is that 52K area, and potentially can extend higher. So it could go up to the 1618, and that's the fib extension drawn from the bottom to 1 to 2, or the possible 1 to 2. But I am going to delete that now, like I said, just to kind of clean these things up. Okay, so within wave 3, when we're doing these diagonals, we typically see 3-wave moves. And this is not high enough to be wave 3, it's below wave 1. Therefore, this would be the A wave of wave 3. The wave down then is the B wave, so there's the B wave bottom right there. And what we're doing right now is the C wave for wave 3. And let's do a fib extension here. I don't know if I've done this yet. Fib extension from A to B. Start of A down to B. Honestly, the normal projection for this is somewhere in this region, right here. So we are basically within that topping point, but you can see that the overlapping zone kind of gives us that more likely scenario right there. Overlap at about, again, 52K, and that remains the key area. So I'm going to leave this big red box on here as the main resistance area there, but just know that the C wave target for the smaller ABC of wave 3 could be a little bit lower. So we are going to have to keep an eye on it. Okay, within the C wave, let me label this. I don't think I have that ABC on. We're going to label this as a potential A, B, C of 3 is what we're looking for. Put that in red to match. Okay, so right. Bullish scenario, here's A, here's B, here's C of 3. That's the bullish scenario. Within a C wave, we tend to see 5 waves. I had been viewing this as most likely a diagonal within a diagonal because this action right here that started off wave 1 is not impulsive. Certainly doesn't look impulsive to me. So I was assuming it was an ABC, therefore we would probably see a diagonal up. Now that being said, the micro action that we've seen, I'm going to zoom in on this in a second. The micro action we've seen says maybe that's not the case. Maybe we actually have an impulsive move here to bring us up, and so maybe we won't visit this area right here. I still am going to keep this channel on for the moment. Let me just make it red, maybe sort of an alternate scenario sort of a deal. I like to keep those in red. Okay, so it is a possibility still that this channel plays out. And this would be perfectly legitimate to have 1, 2, 3, 4, and 5 up into that red box zone right there in the 52, 54, 53K, somewhere in that region. Completely legitimate to see that happen. And that would finish off wave 3, and then we would still see a pretty deep drop down into a wave 4. Okay, so pretty much no matter what, no matter what this is doing, it's not going to be clean. This is going to be very, very choppy the whole way up, and I really cannot promise too much out of this as far as the long-term prospects go. All right, that all being said, I'm going to zoom in to the most recent action and point some things out here. Let's go down to the really low time frame here, 15 minutes. This action here looks very clearly like a 5-wave move. If we draw a fib extension from the bottom to 1 to 2, we can see we hit the 1764 for this wave 3, which is more than enough for it to be a third wave. Third wave should always be the strongest wave. We certainly have that in place here. And then if we actually do a backwards fib here from 3 to 2, I'm going to place this in a different color so we can see it. If this was going to be an impulse, which I didn't really plan for, if this was an impulse, this right here is support zone for wave 4, and look at exactly where we went to. That's support zone right there, and guess where resistance is? Right here. So we have a 5-wave move that has followed all of the fib requirements for it to be an impulse. And so this makes me question whether or not we are going to come down to the bottom of this channel, which I've now gotten red. Because that actually looks impulsive off of the low, I'm leaning towards the possibility that this completes 5 waves up as an impulse, which is really weird since we're within a diagonal, but it is possible as a C wave, even though this one doesn't look impulsive. So anyway, there's lots of issues with it, but this micro move does look impulsive, and I cannot ignore it. So that being said, if we look at this larger degree chart, 1, 2, 3, let me take a look at where we would expect support for a 4th wave to be in an impulsive scenario instead of a diagonal scenario. Diagonal support is this red line. Impulsive support is between the 786 and the 618. And we have some overlap here. Let me just delete this for a second. 618, 786. That's right there. Guess where we spiked into? Right there. We went right into the perfect support zone for this to be a 4th wave of an impulse, which again, I didn't expect because nothing else has been impulsive. But we do certainly have support there, and we've got 5 waves off of the low. So once again, I'm just going to reiterate, I cannot ignore this. The target for this then is the 1236 to the 1382, which is right here, right in that confluence zone, 51.1 to 53K. So again, we're right there in that 52 region. Okay, now the fun thing about that is that it still leaves this as a possibility. If that just gets to the bottom of that especially, right? I said as long as we remain below 52, it leaves open the possibility of a lower low. So this can play out as an impulse and still lead to a lower low. I'm not saying that I am bullish by any means in the longer term. The longer term chart still is trash. Well, the longest term chart is okay, but this action is complete trash. Complete and utter trash. So anyway, we have now this larger degree pointing us up here. We held 4th wave support right there. If that's going to be 4 instead of coming down to this red line, and this would be then 5 of C of 3 potentially, or potentially still this could be our Y wave as an alternate scenario. So orange and red are both equally likely right now in that area. In the short term, which is what I care most about right now because I can try to make some money off of it. Like I said, I cannot ignore this impulse. because we have a very nice impulsive looking move. I can't ignore it. I don't intend to ignore it. And it provides us with really good risk management. We would typically see a wave 2 come into this area, the 382 to the 618. Okay, that's where I've got that green box drawn. Realistically, 2s can go a little deeper, but with such a clean impulse, I would expect that area there. So we're not in trouble, even if it drops a little bit below that. But that's kind of the ideal region to try to add some longs, which I am going to do. And then the stop out point is below here because that is the invalidation of the impulse. If we drop below where the wave actually started, then it invalidates the whole thing, right? So I'm going to try some longs here. I'm going to try some longs between about 45.2 and 46K. And then my target is going to be basically 51 to 53. That's essentially a target. So I'm treating this as a scalp because I still don't know what it's going to do after that point. And in either case, bearish or bullish, I expect a drop down here, at least into this low 40K region. It is possible, just FYI, it's certainly possible for it to go sideways for a while, but basically it needs to touch this purple line at some point. So anyway, again, treating this as a scalp. I don't anticipate that we're going straight to the moon from here, but I think it's a very good scalp long opportunity. If we can get that, in the middle, right around that 0.5 region, for instance, our stop is here, our target is up here. At a minimum, we've got a 3.5 to 1 reward to risk. At the max, we've got 4.8 reward to risk. So very, very favorable reward to risk ratio there for a long in this area. And just as a reminder, I shorted 49 way back here, shorted 49K right there. And then I think it was 49K average. I shorted in that orange box, whatever. Then I added it around 43. Okay, and then I stopped out when we went above 45.8. So I really didn't lose any money on that at all. So like I'm, adding back in now, flipping long in this area is not, I have no loss. I have no, whatever. I'm still going to make money regardless, basically. And it's a really tight reward risk ratio here. So, yeah, so that's my plan. When the setup is there, like I don't have any problem flipping my bias. And short term, at this point, I'm biased long. I'm biased bullish in the short term because of this setup. If we do break down, I do plan on stopping below that. But we could certainly find support there around that area, and I might consider a new long in that area if it holds. But for now, I'm just really looking at this as a positive long setup here with this area here. And just as a reminder, since I've got followers on YouTube who actually are not in my Discord group, I caution everybody to never lose more than 3% of your portfolio. And to be perfectly honest with you, I typically don't risk more than 1%. So that means on a stop out, right? Which, let's just assume for a moment, we're going to do some math. Let's assume for a moment I get right in the middle of this area, which would be about 45,680. Okay, my price range to my stop loss is about 3.3%. Let's just call it 3% to make the math easy. 3% is the stop loss below. Okay, so that actually makes this math really easy. If I have a portfolio of $1,000, right, which I don't, but we're just going to use this as a math experiment here. My risk management says I don't want to lose more than 3%. This stop loss is 3%, so that makes it really easy. That means I can put that entire amount in, and I won't lose more than 3%. Now let's say I want to take it a little bit easier. I only want to risk 1%, right? But my stop is 3% below, so what do? I do not put my entire 1K in. Instead, I put 1/3 of it in because I want to risk less than the stop loss. I want to risk 1% of my entire portfolio. So I would use $333 of my money in this area. And that's all I would do. I would put 333 in there. If it breaks down to here, I would stop out. I would lose 3% of 333, which is only 1% of 1K. And that's about $10. I'd lose $10 if this was my portfolio. Again, it's not. I'm giving you easy numbers to work with here. If I stopped out, I'd lose $10 on $1,000, right? 10 for every 1,000 is what I'd be risking on here. And that's pretty much what I recommend. Anywhere between 1 and 3%, absolutely no more than 3% of your portfolio, because I've said it before, I'll say it again, if you're sure of anything in trading, you are doing it wrong. There is no guarantee. This is a beautiful setup, but it can fail. And if it fails, I want proper risk management, and I don't want to lose my entire portfolio. I don't want to lose very much at all. So I risk, like I said, typically more like 1%. Occasionally I'll go up 2%, but I know some people like to degen, and in my opinion, losing 3% of your portfolio is degenerate. That's as risky as I want to go, right? I'm not talking about liquidating my whole portfolio here on a single trade. And if you have proper risk management, you make money in the long run, especially when your reward to risk ratio is so good, right? If this goes up, the reward for that is going to be 12 to 16%. And if I was using, a 1% here instead of 3, we would take that by 1/3. So I could make 4% on my entire portfolio, up to maybe 5 or 6% on my entire portfolio, right? Based on that move and proper risk management. Okay. So anyway, there's a quick lesson in risk management for you. All right. So that's my current plan, long in that green box area. The indicators certainly support coming down as well. This looks overbought. This looks overbought. We've got a bear div there on the hourly. So it would not be a shock at all to see it move into that area. I'll be even more willing to buy if this turns into a clear ABC down, which sometimes it does, sometimes it doesn't. But ideally it does something like this into the zone. That would be excellent. So I might add a little bit here, and then if we get this and a deeper dip, I might actually be willing to add even more at that point. So initial risk, maybe trying to risk like 1% of my portfolio. And if it actually gives me a clear ABC, maybe I up that, because that gains more confidence then to my scenario, puts even more confidence in it. So maybe I risk 2% instead of 1%. I'll add a little bit more in those lower areas, but that's just kind of how I play it, and how I manage the risk there. All right. So I think that's pretty much it on Bitcoin. Once again, the midterm prospects are still pretty ugly, not supportive of significantly higher prices in the near future. Short term, I do lean bullish though. All right, take a look. I do have right here in the suggested video the macro view, where I zoom out to the daily and show how Bitcoin can potentially, if it gives the setup, go to 100K plus. And please, if you find my content useful, hit the like button and then go ahead and hit subscribe. All right, good night, everybody.